HCL Tech numbers are out and revenue is at 29,890 crore versus 28,862 crore. This is up 3.6% QOQ. Similarly, PAT has come at the levels of 4,591 crore versus 4,235 crore, which is up 8.4% QOQ. All in all, it is coming in with line with the expectations which has been projected. The expectation of bottom line was 4,640 crore and it has come in at 4,591 crore. Let's go across to our guest who has joined in. Welcome to ET Now. My first question to you, Omkar, will be that Rahul Jain has joined online on this news. Welcome Rahul on this show. Revenue has come in at 29,890 crore. It is well within expected lines. What is your take?
Yeah, our first sense is that the number is slightly lower than what we were anticipating. Of course, we need to see the breakup in terms of how has been the software segment revenue, which is typically a better seasonal period for in this particular period. So, X of that is what we would like to understand to see how the performance has been across the board versus a specific segment.
All right, look at the other numbers. There is also interim dividend which has been announced by the company that is in line with what other IT companies have done. Have you also got a chance to look at other numbers like EBIT, which has come at 5,821 crore?
Yeah, so we are working on it, and in terms of margin, I think it is slightly lower than what we were thinking on a sequential basis. Again, here the mix of the business is crucial because the software margin are relatively much higher. So I think we're waiting for the segmental data to understand it slightly better.
Also got a chance to look at the headcount tally? Yeah, have you also got a chance to look at the employee tally, the headcount?
If you know that number, I could not fetch that yet.
So one is the employee addition, if you have been able to look at those numbers, and operating margins, as you were mentioning, that is at 18%. Does that signal a lower than anticipated number?
Yes, our margin assumption was 18.4%, which was implying a small decline on a QOQ basis. At 18%, this is lower than what we were building. And as we saw that the revenue growth itself is a lower number, so probably it is a function of that as well.
To ask you, from the IT companies which has come so far, you would have seen TCS numbers, now HCL Tech. What is the trend you're picking in?
I think as far as TCS is concerned, numbers were below par, but their commentary in general was better, and they were highlighting that calendar 25 to be a better year versus CY 24. So to that extent, I think irrespective of the result, at least the commentary was exciting. Here, of course, the numbers seems to be a slight miss. But if they really have to say anything positive about next year, if they tend to say that, then I think that is something which could be cheered, just like it happened in the case of TCS as well.
Few of the numbers which are flashing on your screen are HCL Tech guidance. Let me read for the benefit of our viewers. The margin is still seen at 18%, 18 to 19% for the year ahead. That is what the guidance which is coming in from HCL Tech. What do you pick up from this guidance, Rahul?
Yeah, guidance, this margin guidance is in the band, in the existing stated band, so there's nothing specific to read out here.
Overall, you see the numbers below expectations, your take?
Yeah, at this point, for things that we saw as of now, it looks like a miss.
All right, so that's the take which is coming in from Rahul Jain. The numbers seems to be below expectations, but the company has decided to pay 18 rupees per share as interim dividend to its shareholders. It's the time for a wrap in this edition of News Now, but keep watching ET Now for more news and updates. Thanks for watching.